You are not going to believe how far NVIDIA is going to drop over the next few weeks. Why is it on our stock list for the week? Watch today's session and find out why that and some other shockers are worth taking a look at going into next week. Let's go. Hey, remember that all the materials we do present are for trading purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. Remember, past performance is not an indication or a promise of future performance. The first one is really kind of an exciting stock. It's CWAN. It looks really, really, really good. And a matter of fact, I'm going to be providing this and one other that is really high rated on the IBD ranking system. Great. And then a little bit later, I'm going to provide a couple of analysis on stocks that everybody loves, but do you really want to be buying it right now? I'm going to answer that question. And then we have a setup on an ETF that's going to blow you away. So on CWAN, it basically provides SaaS solutions for investment data aggregation, accounting, analytics, and reporting service. It's got a let's see, it has a 99 on its comp rating, 2.1 on its up-down ratio, which is very strong. It means it's going to be moving a lot. And it has a accumulation, accumulation distribution of an A, means people are buying this. So why do I want to particularly trade this? Note that this setup over here on the weekly chart, that's one heck of a really nice inverted head and shoulders, which is a bullish move. And it's early on in its move back up to the upside. This is where it came. It was an IPO up here at about 27 bucks. So it still has plenty of room to run back up to that high. What else are we want to be looking at? Well, one, we have run up really hard. We broke out above this level here. So I'm looking for any kind of pullback back into that, around that area here, about the $20.54 level. So where can I expect it to pull back to? Well, throw a fib on this move from here down to here. And it gives a couple of different spots. I really like the 618 level. It is just slightly above the past gap up. And then also we've got a midsection of that big green candle, about 1970. So on CWAN, I would be looking at setting an alert at $20.25 down to about 1977. And once that alert goes off, that would potentially trigger a trade if I have the rest of my momentum starting to shift back up to the upside. And, take a look at this. This could actually break out of this nice little flag right here and move up also. TSI, the market forecast on a daily basis, 2 days ago had a two-line cluster, which is normally followed 1 to 4 days after that with a move higher. Next up is PLTR. A lot of people talking about PLTR, and this is a really nice, planetary tech, AI choice and all that kind of stuff. It has basically bounced, broken out, similar type pattern, only though maybe stronger than CWN. It's got a 97 on its comp rating, 1.6 on its up-down ratio, A minus on its accumulation distribution. Now, disclaimer: our active trend, our autopilot trading members, we did get into this last week. What am I looking at? One could say, hey, I want to buy this somewhere. It's pulled back to the breakout area. So somewhere around 19 bucks would be a good indication. However, if that fails at that level, look for it to come down to about 1904. 1904, 1905. I would put an alert down there about the 1804. Put an alert down about 1880. Would be a excellent place to move back up to the upside. Big gap up after earnings. Again, throw a fib on here. Those Fibonacci's, I tell a story about Fibonacci's, and it's a true story, that Charles Dow, back when he was watching charts and that kind of stuff, he was noticing that after a big run up, there would typically be a 1/3 to 2/3 retracement in a healthy entity, and then it would take off again. So the profit taking would take place up here. And so look at that right there at that breakout area. Oh, that's pretty nice. 1821 is a 50% retracement. So I say put in an alert about the 18, I would say 1830 level, and then look for a reversal signal from there. One of the things that I always look for is you notice that TSI is pointing down. However, if we're in a strong uptrend, it shouldn't get much past the 0 line as it kind of bottoms out up here. Spinning top doji, again, a mark of indecision, could drop a little bit further as the 50-day moving average moves on up. So like I said, I like this to the upside. It has been a very strong stock, and so somewhere in here we should get a reversal that would take us up to more rally. Yeah, the next entity is a favorite of all of ours. Of course, it is. I promise you, I'd show you a couple of stocks that I'm not ready to buy right now, but just kind of walk us through the technical analysis of this. Notice what is going on with Tesla. Well, one, it's in a downward channel or a flag. We have to look at a couple of different things. Yes, this is a bearish or downtrending flag. However, the trend preceding this downtrending flag or channel was significantly up. Now, where are we going to stop? Who the heck knows? But right now, I'm interested in Tesla. If it jumps up and it may or may not reach the downtrend line at the top of the channel. But I continue to place an alert on it. If it breaks out above see the 146 level right there? Yeah, right about the 146. I would put an alert at about 146, correction, 246, and then another one up at about at 250. That would be bringing me close to this downtrend line. What's happened the last times it's hit the downtrend line? Well, it hit it first here. That's what that set it up. Then once here. And again, this is right now a sign of weakness. Look how the moving averages are kind of just jumbling up like a bunch of spaghetti. Now, that does mean that there is a pretty strong level of support in there. Note how we've got a little bit of a gap up right here, and price actions held there about 5 days ago and did a rebound, but that level right there is one where it's not letting us back through. So if I was trading Tesla right now, I would look at, I want to know if it gets up here, or I want to know if it gets down here. And remember, as time goes by, this uptrend line here gets closer to our existing prices. Oftentimes you'll get a move sideways until it hits that level, and then it either breaks down or breaks up. That's a really quick lesson on the technical analysis for Tesla. If we break down, well, which way that breaks its short uptrend structure, then that puts a target at the bottom of the range again. So if you'd rather, so I'd be looking to trade Tesla from the downside from up here, trade it from the upside up here. I might be interested if it does pull back to the 200-day moving average and bounce from there. So Tesla, but what else is next? I mean, these picks keep getting better. Of course, the last pick that I'll show you is going to be, amazing. But the next pick we have is NVDA. Everybody wants to buy NVDA, the hottest stock in the world, blah, 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 blah. Well, what is the story on NVDA? Well, that looks pretty toppy to me, folks, in all reality. What are some of the characteristics of NVDA? One, it has a 98% accumulation, 98% composite rating, 1.3 on its up-down ratio. Its accumulation distribution is at a big red E. What does that mean? That means that people are selling this and getting out of this as quick as NVDA as quickly as possible. Why? Well, they're taking a lot of it's the best. It's one of the best performing stocks of the year. People are saying, "Hey, let's go ahead and take the profits off this, out of this puppy and get the heck out of Dodge." Nothing wrong with that. However, how do we want to trade it? Well, A couple of things come to other pencil out. Couple of things come to light when we start laying on some figures up here. Let's go ahead and put a trend line across here, kind of straight, and then a trend line up here. Now, when I say a trend lines can be horizontal too, folks. What we have is a really nice little horizontal trading range. How do we trade that? Well, I would be looking for NVDA right now. If we break out of that level there or go back up and test in this area, I'd be looking, that's where I'd want to go short. Look for NVDA to fulfill all the way back down to the downside. Now, for whatever reason, if it stops midway, and then rebounds, that is a very bullish sign. If we get all the way down here, it is just basically maintain the symmetry of what it's done previously. So let me give you some numbers on this. So what I would do is I would put an alert down here at about 410, 411. I would also put an alert breaking down below the 20-day moving average, about the 469, 470 level. Also an alert just slightly above the 50-day moving average, which is that golden number right there, at 458. I would be looking at any kind of pullback up towards the 8 or towards this level here for a potential trade to the downside. Like to see, one of those things where it breaks the 50 and then moves back up. But right now, we've slid from a hard uptrend, as we see over here, hard uptrend here, to a sideways trend right now. So take advantage of that sideways trend, bearish engulfing on the weekly, and on the daily, we have a bearish harami, followed with some more selling, and that happened after earnings. The next one after NVDA, as I always do, I promise you a leverage ETF. I really like this one. If you are a leverage ETF trader, you may want to say, okay, this looks really good. The reason why this looks good is right now, the Russell is actually showing more strength than the other ones. Now, I say that because, well, one, it's got a long ways to go to catch up with the other indexes. And so its path of least resistance is probably up, while on the leverage ETF, correction, on the S&P and the NASDAQ, their path of least resistance is probably sideways to down. So how do I want to trade this? On TNA, I would be looking at a pullback back in between this level here. And I want to make this absolutely clear, is that oftentimes I will look at the 8 and the 20-day moving average. In between those is a level of natural support where traders start to look to jump onto the trade. I also have the 50-day moving average there. As you can see, and it works both to the upside and to the downside, where traders are watching that zone in between the 8 and the 20. And oftentimes I will target shoot a price about midway in between it. Now, am I right every time? No. However, I've made a decision. That's where I am willing to buy this at wholesale. So on that, I would put in this particular thing. I'd be looking to buy the TNA at let's say at the 50-day moving average, which is 2747. Let me double check on that. 2747, about the 2750 level. My stop loss then would be if taking out the 20-day moving average. So as you can see, that's a little bit less than 5%. So I'm good to go. As long as we stay above the 20, I can go a little bit below the 20, a percentage point or so below the 20-day moving average. And that would be my stop loss. My projected upside is at least back up to the 200-day moving average or this downtrending line here. So if we went up to that downtrending line on approximately a 45-degree angle, that would be about a 27% move, and we would expect that to be done by the 8th of January. I like that particular trade. This is a trade we did earlier in the year. I just want to share it with you really quickly. This is what we do through the autopilot trading service week after week after week after week is we find the top 50 stocks, and I sorted through and found CPRX at the beginning of last year. We got into this trade order on January 3rd, right there, to buy it at 1810. And as I said, a lot of people ask, well, who does the technical analysis? If I become analysis, and I teach people how to do the technical analysis in our training sessions that we hold every Mondays and Fridays during the final hour of the day. So my partial profits I took at 10%, which we always do on the 6th. On the 13th, we hit 20%. So I took my partial profits there. And so currently I only have 20% of the stock shares I originally bought. And my trailing stop gets hit right there on the 17th. So this overall trade, average profits 13.4%. And we basically utilize this kind of a process week after week after week to provide our dynamic strategic compounding. And that's what helps us beat the S&P year after year after year. Hey, just a reminder, hey, we finally have gotten our new autopilot trading trade journal out, and it's over on Amazon. I'll just leave a link. It's a proven fact that traders who learn how to journal tend to be more profitable. Let me know what you're in fact trading. Which of these stocks is the best one you think that will do well, going forward? If you like this, if you like what we had to provide today, please subscribe to the YouTube channel, Market Tech Talk, and also check out this playlist. I've got some great tutorials on how you can become a better trader.